Should you include an appraisal contingency in your purchase and offer? Today, we're diving into the often misunderstood world of appraisal contingencies. I know it sounds complex, but trust me, after this video, you'll have a firm grasp on whether you should or shouldn't have an appraisal contingency when you are buying a house. An appraisal contingency is a clause in your home buying contract that allows you to back out of the deal without penalty, getting your earnest money deposit back if the home doesn't appraise for the amount you offered. Let's examine the two sides of the coin when it comes to having this contingency. Now, regardless if you have a contingency for appraisal or not, if you're obtaining financing from a bank, they will still have you pay for an appraiser to go out to appraise a property to determine the value. What happens if the appraised value is less than the offer value? It just means that the bank will loan a loan to value at the value of the appraisal instead of your offer price. For example, if you offer $1 million with 80% loan to value and it appraises at $990 instead of $1 million, it means the bank will provide 80% of the $990 instead of the original $1 million offer you made. So the math is $792,000 instead of $800,000, which means you'll need to make up the difference with additional reserves and down payment. On the other hand, having an appraisal contingency can serve as a safety net. You see, it protects you from overpaying for a home. Say if the home is appraised at a lesser value than the agreed price, the contingency would let you renegotiate the price or even walk away from the deal without losing your earnest money deposit. Now let's talk about the flip side. Including an appraisal contingency could mean your offer is less attractive to a seller, especially in a competitive market with multiple offers. Sellers tend to lean towards offers with fewer conditions, and conditions being any contingencies you have on your offer. So how do you determine whether to include an appraisal contingency in your offer or not? Well, that's where your financial situation comes into play. If you're stretching your budget to buy a home and have little room for unexpected costs, an appraisal contingency can provide a significant layer of financial protection. If an appraisal comes in low and the seller won't budge on price, you can walk away without losing your deposit. However, if you have a significant amount of available funds and/or are confident in the home's value, you might consider waiving the appraisal contingency to make your offer more competitive and attractive to get it accepted. Do note that this route can be a bit more risky, as you might end up paying more for a home than it's worth or than what an appraiser thinks, or having to cover the difference if the home doesn't appraise for the agreed price. On the other hand, you may perceive the home being worth more than what the third-party appraiser believes. And of course, keep in mind, in a competitive environment, the winner of any home believes the home is worth more than everyone else involved. Now, another key factor to consider is the market conditions. In a seller's market where competition among buyers is fierce, waiving an appraisal contingency might make your offer stand out. Conversely, in a buyer's market, there's less risk in insisting on having an appraisal contingency. Remember, while you navigate through these decisions, your real estate agent intimately knows the market and the lender intimately knows your financial background to help you evaluate the risks and benefits. Consult with them, understand your finances, know the market conditions, and then make the decision that's right for you and your circumstances. At the end of the day, the choice of including an appraisal contingency depends on your unique situation. It's all about balancing the need for protection against the desire to make an offer as attractive as possible. Here's a checklist that will help you narrow down if you need an appraisal contingency or not. Number 1, how is the overall market condition? Number 2, have you consulted your agent to know what exactly has sold and if he or she has seen any appraisal issues in the last few months? Next, have you consulted your lender to know where you financially stand and if you have any reserves to cover a shortfall on appraised value? And lastly, if you choose to have an appraisal contingency, how long of a contingency is needed for you once you go into contract? If you found this video helpful or if you want to reach out with any questions, definitely do so. We look forward to seeing you on the next one.